right, guys. Good morning. This is our final session, and I can tell that the energy is a little bit low. And I know you're all going to roll your eyes if I ask you to move closer. So instead, I want us to do can we just get the whole audience to do this? You're looking at me like I'm kidding, but I'm not. We just need some engagement, please. All right. There we go. Okay, excellent. I can see some of the future leaders laughing at me. They can't believe I did that. Well, good morning, everybody. So Nick, thank you. That was such a nice introduction. My name is Kat Zaveri. I'm from StoneX, and I am going to sit, but it felt right to stand for a minute. Is this on? Yeah, you guys can hear me. So, go back to this. Over the past few days, we've talked a lot about the changes that are coming to our industry. So this session is about one of the biggest changes running through all of that, which is AI truly at an inflection point in transaction banking? So again, last session, we're really happy that you're here. The focus this morning is going to be practical. We're going to be talking at where AI is already having an impact in banking today. I'm joined by two excellent panelists. We have Bruno Campos, who's a managing director of Treasury Product Payments at Bank of America. Bruno will bring the perspective of what a major bank is already doing with AI today. And then we have Manisha Khanna, who's the head of AI market strategy at SAS, and she'll bring the broader market view, right? Where the market's moving, what's real, what's hype, and what banks should watch out for as AI evolves. So let's start by just getting a quick read on the room. I see lots of you with phones out, so please pull up Slido. And if we can get our first question up there, our first poll, I should say. Great. So which stage best describes where your institution is with AI today? Not using it at all, exploring and learning, piloting use cases, but not quite in production for one workflow, or in production for multiple workflows. I'll give you guys a few more seconds. This is good because it's going to help you guys kind of cater what you talk about to this room. All right, so it looks like we've got it's still coming in. Yeah, it seems like exploring and learning is maybe tied for in production for one workflow. All right, excellent. I want us to can you throw up the second poll for us? This is another question about your institution. Where is AI most scaled in your institution today? So think about this in terms of highest adoption or investment. Employee productivity, financial crime and risk, payments ops and investigations, treasury analytics, or not in production yet. These could be pilots only, or you're just simply not using AI. Okay, employee productivity seems to be by far and away the biggest use. All right, excellent. So this is a helpful starting point again, because it's showing kind of how different institutions are in the room when it comes to implementing AI at your banks. So let's start with you, Bruno. I'm going to sit for this. I'd love to start with the practical side of things. So when we say AI is at an inflection point, what's actually happening inside your bank due to AI? What's shifting?
Yeah, thank you, Kat, for the question, and pleasure to be here today. Good morning, almost good afternoon to everyone. So at BofA, we have taken a very deliberate approach in how we use AI. This is an effort which has a lot of people involved at the bank, from technology people to data scientists, AI champions, and pretty much employees across every area of the bank feeding new ideas. We have received hundreds of ideas in terms of how employees think that we can apply AI on their day-to-day. We're going through the process of evaluating some of these ideas to decide which ones we're going to carry through. We have nearly 100 use cases that are live, and this is not only across the transaction banking. So just to give you a couple of examples, in global markets, we have a tool that allows our traders to evaluate the profitability of the trades in real time. In our contact centers, our teammates have a tool that listens to calls in real time and makes recommendations to whatever the problem may be. In investment banking, junior bankers have access to a tool that allows them to prepare pitch books and presentations. And more recently, on an enterprise-wide basis, we have rolled out Copilot to every employee at the firm. So pretty much we are deploying AI across every area of the company right now.
Okay, great. And so it sounds like it's really being deployed across all areas, like you said. Because we promised we would keep this practical, can you walk us through like one or two of the most tangible use cases and just dive in a little bit deeper?
Yes. So I think the most tangible use case, maybe some of you here are familiar with Erica. Erica is the dedicated agent that we created on the consumer side back in 2018. And it was created really just to help drive some customer self-service for clients and help them to go through common inquiries rather than having to go through someone for those questions, right? And then it has evolved significantly from there. We launched it in 2020, Erica for Employees, and it has achieved over 94% of adoption from our employees at the firm, which we have more than 200,000 employees. So it's quite a huge adoption that we have seen since 2020. And it has been helping significantly because, for example, calls that are being made to technical help desk, what we call the level 1 tech support level, we have been able to reduce those calls by 50% just because employees are using Erica internally, right? And then we completed the arc of evolution with Erica by integrating it with CashPro Online, which is our online banking platform for clients to manage, like business banking clients, global commercial banking clients, large corporate names, managing their treasury needs. And we branded it a little bit different. We call it CashPro Chat, but it's essentially an Erica tool as well, right? So in summary, we have come through customer servicing on the consumer side, helping clients there. And then it has evolved into a large scale internal servicing channel for employees. And then it's also now how our treasury clients are getting help through CashPro. And just to expand a little bit further on this, we took a step further and we also created dedicated agents per line of business, right? So we have now what we call Ask GPS, where GPS stands for Global Payment Solutions, our transaction banking division. We have Ask Merrill, we have Ask Private Bank. And the goal is that if I am working in GPS, I can go to Ask GPS and retrieve any information related to enterprise payments products very quickly. If I am a Merrill advisor, I can go to Ask Merrill and I can get information ahead of a client meeting. So these are all ways that we're trying to remove friction on the front line and just route complexity to specialists as required.
That's very cool. And so you are a payment specialist. And so because that's your area of expertise, where are you seeing the biggest use cases for AI? Is it like fraud detection? Is it predictive analytics? Is it, task automation like you were just describing? Where is it specific to payments, would you say?
Yeah, so usually we see the best use cases where complexity and scale intersect, right? That's where we can deploy AI and be very meaningful. Of course, if you deploy an AI model for fraud detection or fraud scanning side, this is quite common and maybe one of the main use cases that you will see banks applying AI today on the payment space, but also in terms of forecasting, helping our clients to predict their future cash needs. A couple of years ago, we launched a solution that is called CashPro Forecasting, and we designed it in partnership with a fintech. And the goal was really to help clients to predict their future cash needs without having to go through a significant manual effort or without having to go through a significant technology cost investment on their side, right? So this is something that we have seen significant adoption. We have more than 3,000 clients using CashPro Forecasting nowadays. And then these are the ones that are more common when we talk about, AI in payments, but the ones that, sometimes doesn't get a lot of attention, but in my opinion, is actually one of the most important use cases is how we're going to deploy AI to help with the friction that we see on cross-border payments. If we think about transactions that go to repair, right? Maybe it goes to repair because you have, your client has provided a double identifier and there is some sort of ambiguity in the data and requires an operator to look at the transaction and make a decision how we're going to route these payments. If you have a significant large volume of transactions in a given day, you're taking a risk that maybe that operator will only get to your transaction and repair it after cutoff time, and it's going to miss the value dates of the transaction. Then you're going to incur losses, right? This is a huge pain point right now in the industry. So AI needs to be looked at how we can really address repairs. That's one of the things. Also investigations, for some of you might be aware of this, that, cross-border payment reaches the final destination, beneficiary accounts closed, funds need to be returned, and then an investigation case needs to be assigned. And it can take days sometimes for their return to go back to the ordering bank and to the ordering party. So these are all good use cases for us to apply AI.
Yeah, I can definitely relate to that from the payments perspective. One of the things, Bruno, that you said when we were preparing for this panel is that AI creates new opportunities, but it also creates new risks. So let's continue talking about payments specifically, but where do you think it's, you talked a little bit about where it's already strengthening the environment, right? Where is it introducing some new complexity?
Yeah, I think it's kind of a double-edged sword, right? Because you can use AI and deploy AI in your fraud detection system to really make it smarter in terms of how you prevent fraud. But the criminals are going to be using the tool as well, right? And they are already doing it. They are using AI to really disseminate phishing emails at scale. They are using deep fake voices and faces to, create social engineering tactics. They are using AI to scan systems for vulnerabilities, right? So same way that we are applying AI internally, criminals are also using this tool. And I think it will be key for us as a bank to really watch how we govern our systems to really prepare and protect ourselves from all of these threats.
Yeah, that cyber risk makes a lot of sense. So there was a poll yesterday. I don't know if you guys will remember, but there was a poll yesterday which was, is it more difficult to understand new technology or implement it? And 100% of the audience said that implementing it was more difficult. So given that Bank of America has done so much in actually implementing AI within your bank, can you tell us a little bit about what were the conditions that had to be in place to move AI from just experimentation to actually implementing it and scaling it across the bank?
Yeah, just before I go into AI, I just wanted to mention that I think every firm should have some sort of innovation framework, right? Which is really regardless of AI. So we first need to think through what is the client challenge or the pain points that we're trying to address, either client challenge or internal challenge from a specific department at the bank. That's how it gets started, right? Then we can think through how do we solve for that problem, what technology we are going to apply, and whether AI is the best technology for that or not.
Yep.
Now, to your point, let's make an assumption here that, we have gone through this and AI is the right technology for this.
Yes.
I think you're going to run into, you need to have sustained investment across the firm from an AI perspective. Mm-hmm. You need to have cross-functional collaboration because you need to partner with compliance, risk, operations, technology, network management teams, everyone from the start. Because if you try to create a solution and then you try to govern it later, you run the risk that you're just going to have some sort of a proof of concept that never becomes anything more than a proof of concept.
Yep.
And then the third thing, it's you need to also create that internal adoption with employees, right? Whether it's training them to check the output of the AI tool to ensure accuracy, or if it's really, just training them how to use these AI tools to make their lives easier, right? But perhaps the most important thing is data, right? Because a good AI model is only as good as the underlying data that is being used by that AI model. If you have garbage coming into your AI model, the output from that AI model is also going to be garbage, right? So in our case at Bank of America, I think we have been very lucky because even before all of these conversations and hype started with Gen AI, we started a data modernization process to really gather all of our data across global systems into a centralized database, looking for duplication of data, how we clean up that duplication, how we clean up nomenclature that can be confusing for the AI model. So this is perhaps one of the main challenges, especially for large financial institutions, how you're going to integrate data across multiple systems so that you can deploy an efficient AI tool that is really going to produce good outcomes.
Okay. So to recap that for the audience, you said cross-functional buy-in, right? Good data and actually training your employees on how to use it.
And investment.
And yes, cross-functional investment. Okay. Excellent. Those are your takeaways. This, I think, is a good time to put up our second poll. So get your phones back out. We're going to switch over to Manisha here in a moment. But before we do, we want to do a little bit of level setting. So how familiar are you personally with AI tools? We said beyond ChatGPT style tools because we assume that that's probably the most common use case. We put that in there as well as an option. So new to AI with very limited hands-on use. I use LLMs like Copilot, ChatGPT for productivity, but that's about it. I understand AI use cases in banking like fraud, AML, payment ops, forecastings at a high level. I've been involved in an AI pilot or deployment, or I help build or govern AI programs. All right, so no one in the room helps build or govern AI programs. They probably wouldn't have come to our session. They didn't come to our session. Okay, excellent. Okay, so Manisha, most people in the audience's familiarity is in using the LLMs. So let's broaden this from, Bruno, what you've told us about how Bank of America specifically is using AI and transition into what you're seeing across the market. So Manisha, from your market perspective, what do you think makes this a genuine inflection point for AI?
Absolutely, Catherine. And first of all, very glad to be here. Good afternoon to all of you. And I'm sure Catherine's little workout helped us stay in tune and stay connected. I do want to level set before we get into the inflection point question, because I see a lot of people here are just using fundamental basic large language models, more for productivity use cases. I do want to speak about these three taxonomies of AI, but think about these taxonomies not as three different categories, but really as progression on how you can start implementing AI and get more ahead of the curve with regard to more complex AI implementations. Predictive AI, I believe, is very familiar with most of you here. This is the AI which predicts, it tells you what's going to happen next, looking at past behavioral patterns, right? Generative AI generates new content, and it's also being very popularly used in ChatGPT style to improve your own productivity, to basically help you as an AI assistant. All the ask use cases, which Bruno mentioned, they all apply in the generative AI section. The third era, which is the next frontier of AI technologies, is agentic AI. And the difference here is this is the AI which just does not recommend or assist. It really pursues goals. It acts on your behalf. It's a lot more autonomous, and it's got a lot more agency than all the other past forms of AI. And that's what makes it different. And I see a question here on the Q&A section as well in terms of leveraging agentic AI in AML transaction monitoring and screening. So I'll just ground this with a few examples here, taking that context and also answering that question. So think about your AML transaction monitoring systems, right? Trade-based money laundering is definitely top of mind for a lot of people here. So how trade-based money laundering monitoring has been working for a number of years is you are basically having a scoring system where your transactions and your, let's say, your letter of credit deals, etc., get monitored, and you're doing some behavioral scoring, let's say for over-invoicing, under-invoicing, looking at price checks and so on and so forth. That's more predictive in nature, right? When you look at generative AI, imagine that transaction monitoring system has now generated an alert, right? And that alert is to be looked at by an investigator. Think about an investigator using an ask assistant, right? Where generative AI is being used now to query and investigate the case further. So you ask the assistant to say, hey, this transaction has been flagged for alert. Tell me more about this. Generate a counterparty risk summary for me. Summarize this information. Help me draft a suspicious activity report. This is where generation of content is happening, and this is where AI assistance is helping you improve productivity for your investigators. Where agentic AI comes in is, and I think we need to start thinking of it slightly differently. This is where agentic AI, for example, think about these agents which are not waiting for analysts once that alert is fired, right? Agents can now, as the analyst is perhaps in its midnight, taking a good night rest, the agents can now start pulling that alert. They can look at pricing information in invoices, go and pull out live commodity data stream pricing and compare the price information to look at over-invoicing and under-invoicing. They can also look at shipment information and go and look for locations and tell you whether these are high-risk jurisdictions. And in the background, all the analysis which they do and their reasoning, I think Maria mentioned agents reason, that's actually exactly perfect. So they are reasoning, and you can ask these agents to generate an evaluation summary for, let's say, preparing a pack for the investigation analyst, so that when the analyst wakes up, all of this information is ready for them for the humans to decide in the end. I insist that humans still need to decide, and here the agent is your co-worker, which is doing a lot of heavy lift for you. So agents are really helping you do that heavy lift, do the pre-processing, while humans are in the loop, on the loop to make sure they're taking the final decision, because at the end of the day, they are accountable. Think of these three as layers of implementations. I just took one simple use case and I showed you how all three of these layers can work together and help you evolve in your own progression of technology.
Thank you. And thank you for level setting as well. I think it was helpful to me when we did this. So I hope it was helpful to you all. I want to take a step back and ask you, from your perspective, are there indicators that lead you to believe that we are truly at an inflection point with AI versus just another wave of hype? And I think everybody in the room can probably say, you've been to several AI panels, and a lot of times it's not rooted in what's actually happening today. And so are we actually at a point where things are changing, and what leads you to believe that, or are we not? Is this...
Absolutely. And I've been in the technology industry, and I've also worked for a bank in my past career for over 2 decades. I'm working at the inflection of analytics and banking. And I've seen enough hype cycles come and go. What I think is this hype cycle is definitely different from what we have seen in the past. And there are reasons why. There are 3 major forces which are coming together right now. Think about data, right? Banks have spent last decade investing in data infrastructures, and I do believe they're a lot more mature than they were before, right? So you have a great starting point where your data is a lot more gathered compared to what it was. It's not perfect still, but that's an evolution. The second inflection point is, think about those models which we are interacting with. The large language models have now, for the very first time, have got this power to look at insights which are coming from unstructured data. And trade finance, for example, as an industry, we've all discussed here in a number of sessions, it's a very document-heavy process, right? You were not able to harness those insights because we were at a certain point only able to use natural language processing, which is more predictive AI in terms of its form, and it did have its own flaws, right? Now, with large language models coming in, your models can generate those insights which you never had access to, and those models are large, they've got billions of parameters, they are generalized now to be able to act and be able to reason on your behalf. So that's number 2, right? The third inflection point, which I want to linger on a bit more, Catherine, if you allow me with a bit more time here. Yeah. The third inflection point, which is very important, and I love how the room said that they are all using ChatGPT, LLM-like tools, right? The signal here is not all of you are trained in technology and AI, I assume, right? But all of you are using this AI right now. This tells you that the user experience has shifted. The way you interact with your data has completely changed. The way you look at information has completely changed. Think about reports, right? Everybody has access to BI reports and dashboards. We all love dashboards, right? They all give us right signals at the right time, I wish, right? But look at those dashboards now. So what's changing now is, instead of waiting for months to generate one dashboard where you were reliant on your data engineering team, you were reliant on your technology team, report used to come and it used to be stale, and then you had feedback, you were going back again and going through that cycle. By that time, the decision was taken, right? Now, the way the reporting works, and it's a game changer, that you're actually interacting with that report. You have got access to, let's say, an assistant here, where you're interacting with that insight right away. So the relationship of you with your information changes. That insight is delivered faster to you, so you can make business decisions a lot faster than you were ever able to make before. And you do not need to be technology trained on it, right? You need to be technology aware. You do not need to be technology trained. So user experience is definitely a game changer. So 3 areas which really signal a great inflection point at this stage where we are with AI.
Great. And you also mentioned that we're moving more to agentic AI. So I think this is actually a question for both of you. Can you tell us a little bit about how agentic AI is contributing meaningfully to transaction banking? I mean, you obviously listed, Bruno, some use cases of how you're using it, and you were talking about the shift in types of AI, and that's what makes this an inflection point. Is there anything you can elaborate on specifically to banking and how that is affecting our industry?
Right, and I'll allow Bruno to elaborate a lot more on the banking context. I will give you some snippets in terms of why we do not see agentic AI right now contributing immensely in banking space and in transaction banking. Though the technology is great, it shows a lot of promise, right? But then there is fear in the market, right? So I do want to dispel some of that fear as I speak. So do not think of agentic AI as something which is uncontrolled, right? There is governance mechanisms which the entire technology industry is currently working together to make sure some of these large language models can be governed better. These are not uncontrolled AI. So that's number one, right? Second thing I wanted to think about is agentic AI is not here to replace humans. And that's true for banking. That's true for any other industry. It's not here to replace humans. Think about these as new co-workers who are joining your team. And when new co-workers join your team, think about new joiners in your team. Whenever they work on something new, you want to be able to make sure that they explain what they're doing. And this is where governance mechanisms come in. And I do tend to say this a lot of times. When it comes to AI, ungoverned AI is more of a liability than the level of value it creates. And I think that's completely true for highly regulated industries like banking, right? So think about these as areas where governance has to be built in, not bolted on afterwards. Think about these agents as co-workers, and think about these as not uncontrolled, agents which are working in your system, but really something which can be embedded in your business processes, in your daily jobs, so that you can improve the work sphere and productivity and get value out of these systems.
Okay.
Yeah, and I think from my perspective, I see, at least at BFA, we're using generative AI quite a lot as a summarization tool. Not so much agentic AI at this point in time, even though we continue to monitor the technology and its potential very closely. I think that we hear from clients that there is concern with us just making autonomous decisions on their behalf, right? So if we are to ever build some sort of an agentic AI solution, and I know we heard through the conference, I think that are companies that are already working on agentic commerce, e-commerce solutions as well.
Yep.
I think the main challenge that we're going to face as an industry is how do you gain trust from your clients? How do you explain what the AI model is doing, right? Because you won't be able to just sell a solution and not be able to explain, especially for a large company, how your model works. And then where do you draw the line, right? I mean, what level of explainability will be enough to get the comfort from a corporate client to use your tool, right? I think these are the key questions, because you need to share something, but you can share quite a lot as well, because this is your proprietary tool, right? So where do you draw the line in terms of how you explain how your model works to drive that satisfaction with the client that, yes, I can trust this tool?
I think that's so interesting. And honestly, there's so much more we can dive into, but I want to make sure that I get at a couple questions that I'm actually seeing on people have submitted. I'm kind of pivoting. So there's one question here that's, what should banks stop doing if they want AI to create real enterprise value? It's not the question I want to ask you, but it's close. It's a lot of healthy skepticism we're talking about. One of the concerns that some people have is that AI initiatives are really just shiny wrappers, right? So they're great interfaces, but they're not really driving enterprise transformation. So what are some of the red flags for the bankers in the room that the bank's AI effort isn't actually delivering real value?
Yeah, and I think, Catherine, that's a great question. And coming from the tech sector, I can tell you I see these shiny wrappers every day. I mean, I'm in front of cool demos all the time, and the new technology comes in and there's a cool demo coming, right? And it's natural to be excited about these because they show so much potential, and they basically are game changing in terms of power of what they can do. But I do think about this framework of challenging each demo and each shiny wrapper I see in terms of 3 C's framework, right? And I'll share how I think about it. Think about 3 C's of complexity, cost, and control. And let me elaborate on this a bit more. In terms of complexity, and I know there was discussion around it's difficult to implement AI versus kind of just piloting AI, right? The reason for that is there's a lot of complexity which happens in real life when you start implementing these technologies. So question whether this demo I saw, this shiny wrapper I saw, will it work on my proprietary data? Will it work in my domain context? Will I be able to integrate it in my own business processes? What about people and human? What training do I need to give them? What skill set do I need to develop in my team? So there's a lot of complexity which is there in real life, which calls for true transformation, and it's just not a technology implementation anymore. Now, the second bit, which I am really researching a lot about, is the cost, right? The cost of these models, and there are 2 levels of this cost, right? There is a cost which is to implement AI, and there's cost to maintain these AI systems. The first one is a lot more predictable now because you can exactly work with your vendor and they will tell you this is what you need to invest to deploy this particular AI system. But when it comes to deploying AI and now think about these models running in production, what's happening right now in the industry is that a lot of these technology providers who are providing you these large language models, they're not profitable, right? So at some point, the cost of inference, when I say inference, it means that you're prompting a model. The model is returning a result to you. That's basically an inference process in its all simplicity, right? So that inference cost is something which is not predictable right now. And that's something which is expected to go up at certain point in time. And guess what? Who will bear the brunt of it once the user base gets increased, right? Because these technology companies want to be profitable. So cost is something you should challenge. Think about this. I think last night we were having some conversation on budgeting and forecasting. So do your budgeting, but also forecast future implementation costs, run costs of these models. That is something you have to be very, very considerate about right now in this particular climate. The third one is controls. And again, this goes back to the discussion we were having on governance, right? So will this be controlled, right? Who will be accountable if something falls back, right? Who will answer the regulators? Who will answer my customers? Do I have backup mechanisms in place? Can I turn off the switch of this AI system? Because these systems can actually go rogue at some times, right? So these three are my framework. Remember these three C's: complexity, cost, and control. I personally challenge every implementation when it comes to AI using this framework.
Great. My last question for you, Manisha, and then I want to give us a little bit of time to move into the Q&A. But if a bank does recognize that it's fallen into this trap where they have too many pilots or there's not enough measurable value, how do you course correct? You just stop what you're doing?
Well, I do not have a framework to answer this question for you, Catherine, but I think the answer is very simple. This is truly about operational discipline, right? So if you're seeing a lot of pilots, and this is the time where we are seeing a lot of pilots being implemented, I think Bruno spoke about innovation. I am completely advocate of innovation, and we need to innovate with these technologies, and that's how we learn to implement them. But at the same time, there is a lot of pilots which are surfacing in different parts of the organization. There's truly shadow AI everywhere, right? Mm-hmm. Every employee is excited. They're kind of playing with a new tool. You don't even know whether that's governed or not, right? So think about these pilots more actively, get visibility in terms of what's happening in AI across your organization. And in terms of what you can do right now is, I would say stop 2/3 of them right away. The reason I say that is you're actually burning a lot of costs without a lot of value to these. You need to think about your AI strategy, reset it, and look at those use cases and challenge them to see, are they connected to my North Star, which is what my business needs? Am I improving customer experience? Am I reducing cost? Am I improving revenue for the bank? Or am I managing risk, right? So if you have those North Stars in mind, and if you cannot connect the use case to one of those North Stars, cannot have leadership accountable to make sure they're able to deliver ROI using that AI implementation and connect them to your business processes, I would say just stop the pilot.
Okay. All right. Now we're going to do a really quick rapid fire for you two, where I want to ask you each, I'm going to ask 3 questions, but I'm going to put it to both of you. Max answer is a sentence. Okay. So rapid fire, you don't get to elaborate too deeply on these. Okay. So first question for you, Bruno, a year from now, where will transaction banking be different because of AI?
I hope exception handling for payments.
Manisha?
I would think trade-based money laundering. That's my passion area. I want to see that changing.
Trade-based money laundering. Okay. And where will humans remain essential, Bruno?
Whenever there is context and judgment that needs to be taken place, I mean, you can just take, AI can inform the decision, but I think humans still need to own and take accountability for what the decision is going to be made.
Okay.
I would think humans will be doing less processing and more decisioning. That's what will change.
Okay. And then what is one thing that banks should be careful not to get wrong? Let's start with you, Manisha, this time.
Deploying AI without knowing what data it's going to work on, and can you trust that data? That's a kind of go or no go.
All right. Bruno?
Automating just for the sake of automating. You need to think through your process. You need to think through how I can simplify my process. And then you think through, well, does it make sense to apply AI or not?
Okay, awesome. Thank you guys so much. Let's open it up to the room. We've got about 3 minutes left. So are there questions on here that you feel really passionately about answering? I should ask you.
So one AI use case in banking that feels unappreciated today, right? I would perhaps have a take on that. I think there's a lot of use cases we're talking about where we're talking about employee productivity.
Yep.
Right? We do need to think about business operations. And I think maybe an year down the line, I see those operations changing quite a lot. And we do need to appreciate that change and make sure we're training our workforce ahead of time on that.
Yep.
Yeah, I would agree with that. I mean, I go back to the one where we keep on talking about, forecasting and agentic, the agents, right? But we don't talk as much about, how you can deploy AI maybe for reducing false positives from a compliance perspective, right? So we know we have made as an industry, you have made significant progress with the adoption of ISO because we created those data elements to really distinguish address versus name, which was kind of convoluted in the former MT messages. But I think that is still quite an opportunity for us to improve how we are performing sanctions screening and deploying AI to reduce the number of false positives as well.
Great. I do actually want to go back to one of the questions that I didn't directly ask you, but it had like 7 upvotes. And I think the question was, what should banks stop doing if they want AI to be effective?
I can take a stab at it, Catherine. I think we need to rethink of where we are investing our efforts when it comes to AI. A lot of the matrices I am hearing people are measuring, and this is not just banking, it's all across the industry. A lot of them are vanity matrices. We start talking about, hey, I am deploying 100 use cases. I have got 100 people trained on AI now. They're using Copilot. That's great, but that's a starting point, right?
Yep.
So I would like banks to stop looking at vanity matrices and start looking at real game-changing matrices so that they can excite the company on AI implementation and then get more funding to make sure they're able to implement AI in the right way to get that business value.
Yeah, I mean, I just wanted to add, maybe we could say, well, if every bank should have like an AI strategy, should treat AI as a critical risk domain like we do for cloud or third-party management. But I think maybe we cannot miss the most basic thing, which is as banks, we have a bunch of processes that are documented and they govern how we operate the bank every day. And operations is the same. We should be looking at our processes and we should be thinking, can AI help? Can I simplify this process if I have AI, right? And I think this is very basic. And we don't have to quite think too much to go through your processes and think through, does it make sense to automate this?
Great. Thank you to Bruno and Manisha, and thank you to all of you for sticking around for the very last session. Conference is over, but you know where to find these guys. They're great. They've got lots to share. So thank you again. And with that, we'll wrap it up.